Okay, so this is the 2011 Higher Level Junior Cert question, and it's entitled Brady Limited. Now, with all of these final account questions, the most important thing to do is to read down through the question very carefully first. And you mark off with each figure exactly where it's going to appear in the final account. So if it's in the trading, put a T beside it. If it's a fixed asset, put FA beside it. A current liability, put CL beside it, and so on. Remember that all the adjustments at the bottom have to be entered in the final accounts twice. So each of those figures should have two labels beside them. Okay, so we'll start the question. As I always say, the most important and easiest marks are with the titling of the question. So full titles: the trading profit and loss and appropriation account of Brady Limited for the year ended. You're doing it for a period of time. You're seeing did they make a profit over a period of time. In this question, it's for the year ended 31st of the 12th, 2010. So we're going to look down through the question and see what we've got here. So this company had sales. There's no sales returns here. So we're going to get rid of the sales returns, and we're going to bring the sales straight out to the last column, and that is 510,000. Then there was, we're going to find out what it cost the company to make those sales. So the first cost it has is the stock at the beginning of the year. Now let's put the date beside the opening stock. The junior cert markers can be fussy about dates, so always put them in. And when you write a date, it should always be the day, the month, and the year. The opening stock was 32,000. This company also had purchases. There was no purchase returns. So we get rid of the purchase returns out there, which you'd normally take away. And the purchases were 270,000 euros. The company had no carriage inwards, but what it did have was import duty. And I've looked down at the adjustments already, and I've seen that there's import duty due as well. There's an accrual on import duty. So what that means is, in this year already, this company has paid 3,800 euros of import duty, but it still owes another 1,500 euros of import duty to the company, or probably to the revenue commissioners, actually, the government. So in total, the import duty figure for the year is 5,300. What they paid versus, and added to that, what they still owe. So when I add these three figures together, I get my costs of good available for sale. The stock I had at the beginning of the year, the purchase and the import duty, go together to make the cost of everything I have available to sell. Sometimes in here you'll also see carriage inwards, and you've got to watch out for carriage inwards due as well. That would be added in as a cost of good available for sale. Now, of course, they didn't sell everything they had available to sell because they had stock left over at the end of the year. So we would take away the closing stock, and again I'm going to put in the date just to satisfy the markers, and I'm going to take away the closing stock because that is not a cost of sale because we haven't sold it yet. So it's 25,400. So when I take my closing stock from my cost of goods available for sale, I get my figure for cost of sales. What it cost me to make my sales, and it's 281,900. So I have my sales figure, I have my cost of sales figure. So I take my cost of sales from my sales, and I get my gross profit. The gross profit is the profit you make from your trading activities, from your buying and selling activities. Okay, so moving on. I'm going to see if there's any profit and loss gains in this question. And this company has one profit and loss gain, and it's interest receivable. Normally when you see receivable after something, it tells you that it's a profit and loss gain. However, I look down at the adjustments and I see that there's an adjustment on the receivable figure, and it's interest receivable. And there's interest receivable due. I'm just going to change this here to black. and it's taking its time. There we go. And likewise this figure. Okay, so the interest receivable is 22,400. So this company has already received 22,400 of interest, perhaps on an investment or savings in the bank. They're also owed an additional 1,200 euros in interest. So the total interest figure, and I just like to put the black line underneath it when I'm doing a little addition. Border. The total interest receivable figure is the amount received plus the amount owed, which in this question is 23,600. So what I'm going to do then, again, I'm just going to format this one here. I'm going to do a little addition, whereby I'm going to add my receivables to my gross profit. In this question I get 251,700. Now I'm going to start looking at the expenses of the business. And the first expense I see is insurance, but again there is an adjustment on this. So the insurance figure is 23,000. However, this company has insurance prepaid, i.e. it has paid insurance, but some of that insurance does not belong to this financial year, which ends on the 31st of the 12th 2010. It belongs to the next financial year. Therefore we shouldn't include it in this year's accounts because it does not belong here. In a sense, we've prepaid some of next financial year's insurance, so we must take it out of this year's accounts. So we take away the insurance prepaid, and we get 19,800. Again, when you're doing a little sum, you should just show that you're doing some addition or subtraction for neatness. Okay, the next expense is wages, and the wages here, there's no adjustment on them, and they're 83,500. There are only two more expenses in this question, and they're actually two depreciations. So depreciation is when an asset loses value, perhaps due to age or wear and tear, and the company is allowed to write off that loss in value as an expense. So the depreciation on motor vehicles in this question is 6,000 euros. 6,000 euros. So just put that in here. And the depreciation on machinery is 15,000 euros. 15,000 euros. Now, where I got those figures from was down in the adjustments. You'll see that the motor vehicle depreciation is 12%. And in the trial balance, you'll see that the motor vehicle figure is 50,000 euros. So 12% of 50,000 is 6,000. Likewise, machinery is going to be depreciated at 10%, and in the trial balance the machinery is worth 150,000, so 10% of 150,000 is 15,000 euros. So we come back to the question here, and we're going to add up all our expenses. So again, when I'm doing addition, I like to put a line underneath to show that I'm doing addition. And the total expenses are 124,300. And totals I like to put in red. So these cells here weren't needed, so I'm going to get them out of here. Okay, so I have my total expenses, and I have my gross profit plus the gains. So to get my net profit, I take away my expenses from my gross profit plus gains, and I get 127,400. The next thing I'm going to do is add in the reserves from last year, the profit and loss balance from last year. And you will see in this question, the profit and loss balance carried forward from last year is 52,900. And the reason I know it's a gain or it's a profit is because it's in the credit column. If it was in the debit column, it would be a loss, whereas gains and liabilities go in the credit column. So I add in 52,900 here and total them together and get 180,300. The last part of the question is to do the appropriation account, where we appropriate the profits of the company. Now in this question you are given the dividend and told that it is already paid. In some questions, in the adjustments, they will tell you that there is a dividend declared. That means that the dividend has been announced, but it has not been paid yet. And normally they will give you a percentage for that. When calculating that percentage, you get the percentage of the issued share capital of the firm. So if it's 10%, you get 10% of the issued share capital, and you take that away. In this question, however, they just tell you that the dividend has already been paid, and it is 14,000 euros. So you take away your 14,000 euros and you get your retained, actually it says retained profit here, I'd like to call it the retained earnings of 166,300. Moving on then to the balance sheet. The balance sheet is a snapshot of the financial health of a company on a particular day. Therefore the balance sheet title is different to that of a trading profit and loss. So this is the balance sheet of Brady Limited as at or on the 31st of the 12th, 2010. And the first section in the balance sheet is fixed assets. Those long-term assets that the company owns. Now I can see in this question that they have 3 fixed assets. They have buildings, and the cost in those buildings is 285,000. They have motor vehicles, and we've already depreciated them, and the cost in the trial balance is 50,000. And then they have machinery. And the cost of machinery is 150,000. Now, there's no depreciation on buildings, so I just bring out the total. NBV stands for net book value. Basically, cost minus depreciation gives you the net book value, what the asset is worth to the company on its books. Motor vehicles has depreciation of 6,000. So I'm going to take away 6,000 here, and I get 44,000 as the net book value. Machinery has depreciation of 15,000, and I'm going to take away the 15,000 here. I get 135,000. Now, it's very important that you total up the columns in the fixed assets section. There is a mark going for each of the totals. So if I total up the cost column, the depreciation column, and the net book value column, and I like to put my totals in red. Okay, these are the we've just dealt with the fixed assets, the long-term assets of the company. Now we're going to move to the current assets. So the current assets are those assets whose value will change in the short term. And the first current asset will always be the closing stock of the firm, and that is 25,400. Also, this firm is owed money by debtors, people who it sold goods on credit to, and it's awaiting payment from those people. And the debtor's value here is 31,000, so they're owed 31,000 from their debtors. That is an asset, because hopefully you will get that money in the future. It's a debt that you own, that someone must pay you. They have a positive bank balance of 19,000. The reason I know it's a positive bank balance is because it's in the debit column of the trial balance, and it's an asset. If it was a bank overdraft, it would be in the credit column, because all liabilities are in the credit column. This firm also has cash of 12,000. Now it has two more current assets. The first, as I said, all adjustments must be entered twice. An interest receivable due is a current asset. The bank owes you money in interest. And also insurance prepaid. Whenever you prepay an expense, that is considered an asset. That is 3,200. So I'm going to total up those. And get my total current assets figure of 91,800. Now this firm has two current liabilities, two debts it must pay within 1 year in the short term. The first one is creditors, people who this firm has bought on credit from and they owe money to. They've bought the goods now and they've paid later, so they still owe for some goods. And also import duty due, so perhaps they still owe the revenue some import duty outstanding. Again, that was in the adjustments, and you've now entered it twice. Once in the trading account and once here. So I'm going to total up my current liabilities, and in this question I get 19,500 for my total current liabilities. Okay, so now that I have my total current liabilities, I can find out my working capital. The working capital is the money available for the day-to-day running of the company. What you own in the short term versus what you owe in the short term. Total current assets minus total current liabilities. And in this question it is 72,300. That's the figure for working capital. Now, to get my total net assets, I add my working capital to my total fixed assets figure here. Add those two together and that will give you the total net assets of the firm, which in this question is 536,300. The second part of the balance sheet we look at where how the company was financed, where it got its money from. And the first section we fill in is the share capital. Now the authorised share capital is the amount of shares the firm is allowed to sell, and that is normally given in the introduction of the question. This firm is allowed to sell 500,000 shares. They have actually only sold 350,000 shares. This is given. The issued share capital is in the trial balance. Now this firm has some long-term liabilities. It has a 20. Sorry, it just zoomed out a sec. I'll zoom back in. It has a 25-year loan. So, and we are going to put in this loan in here. Now, often people, when they see a loan, they feel like they have to take it away. The loan has been invested in the company and forms part of the capital of the company. The bank gives you a loan and you put it into the company, and therefore it must be added into the capital of the company. The final figure to be added in are the reserves, and those are the retained earnings of the firm. Now where I get that figure is back here in my trading profit and loss account, and at the bottom, right at the bottom, the 166,300 represents the money that's been retained in the company, that's been reinvested in the company. And it's 166,300. So when I add these three figures together here, I get the total capital invested or total capital employed in the firm. And that will always match, if you've done the question correctly, the total net assets of the firm. So total net assets should match total capital employed. And in this question, it does.